What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about both silver and gold, along with how the ratio gap seems to be closing in a little bit and what it would take to close in even more. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, come and join us in the Precious Metals VIP Club, and of course go and get your 2 free stocks by downloading Webull and funding your account. Everything will be linked in the description. So today is Tuesday, February 22nd, 2022. That's 2/22/22. Happy Tuesday. Spot price of silver, as I'm filming the video, is $24.18. Can you imagine if it was $22.22 a day? That'd be something. It's up 26 cents, or up 1.09%. Solid green day for silver today. Spot price of gold is $19.0130. It's down $1.90, or down 0.1%. Very, very mild red day for gold, and the gold to silver ratio is currently in the 78 to 79 to 1 range. But again, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. Alright, so today I wanted to talk about the gold to silver ratio gap closing in a little bit, not by a whole lot, not by a wide margin, just a little tiny bit at a time. And I wanted to point this out today specifically because of what we're seeing in terms of the spot price of both silver and gold. Like I said, silver is having a pretty solid green day today, while gold is having a very mild red day today. Now, obviously, this isn't the case every single day, but it seems to be kind of a trend most of this entire year so far. If silver's in the green, gold might be in the green as well, but usually, performance-wise, when it comes to percentages, silver's up quite a bit more than gold is up. If they're both in the red, they're both in the red. Sometimes silver's in the green and gold is in the red. I can't even recall any time this year where silver has been in the red while gold has been in the green. It might have happened a couple of times, but not that I can recall. And obviously, sitting here on screen, we have a little bit of silver and a little bit of gold. We got the Aztec calendar, some silver bars. We got some miscellaneous silver coins. We got some fractional gold over there. Bunch of 10th ounce and a quarter ounce gold coin. Now, we're going to be talking quite a bit about the ratio today, but before we can even get into the money, I think it's important that we first talk about the currency. More specifically, some really important dates that you might want to mark down in your calendar because they're actually pretty crucial events that are coming up over the next 2.5 weeks. First up, we have the February jobs report. This is something that we're not even going to be getting until either Friday, March 4th or Monday, March 7th. This is going to be all of the data, all of the information collected for the month of February. Obviously, it's not going to come out in the month of February. It comes out the first week of the following month. So that's something to look forward to. And after that, we have the February inflation report. This should be coming out on March 10th. This is something that's going to be absolutely crucial, and it has the potential of really brutalizing the markets and what we have going on, because what would follow the inflation report coming out on or around March 10th would be the Federal Reserve meeting on March 15th and 16th. So we're going to be learning quite a bit of information regarding that on the 16th after the meeting comes to an end. Now, the reason I say the inflation report might end up brutalizing the markets is because if you remember, in January, I had said that the next 2 inflation reports are going to be major catalysts when it comes to the Federal Reserve's decision making, when it comes to the taper. Are they going to end the taper sooner than expected, which would pretty much be a rug pull? And on top of that, are they going to end up raising rates in larger increments than we're expecting, which would be a secondary rug pull? all based on the next two inflation reports. Now, I said that in January. The first week of February, we got one of the two. And guess what? It was worse than the previous inflation report. So we have one more inflation report coming up. It's about 2 weeks away. And depending on what that looks like, the Federal Reserve might actually switch up their strategy. They might change the game plan a little bit. Now, between March 10th, which should be when the inflation report comes out, and March 16th, which should be when the Federal Reserve meeting comes to an end, only 6 days have gone by. So I don't think a whole lot would be going on in the middle of that. But if this upcoming inflation report is still bad, if inflation remains persistent, which I think we know that it is and that it will, I do not have high hopes for this upcoming inflation report. I'm not optimistic about it. I'm optimistic about inflation for the long term, but in the near future, next month, really the whole first half of this year, I'm not optimistic at all. So it might end up resulting in the Federal Reserve saying that we need to hike rates in larger increments. Probably not going to be 0.25% at a time. Might be 0.5% at a time. And they might raise rates more frequently than they originally have planned. So anyway, mark your calendars for that. Jobs report coming out should be the first week of February. Inflation report should be coming out March 10th, and the Federal Reserve meeting takes place from the 15th to the 16th of March, and we're going to be getting a lot of information once that meeting comes to an end. So moving away from all of that, I also wanted to very quickly mention that the stock market, it's the first day that the market's open. Yesterday was a holiday. Market was closed. Today is the first day the market is open this week, and it's looking mildly red. We got the S&P 500 down 0.05%. We have the Dow Jones down 0.39%. We have the NASDAQ down 0.15%. Not much of a bloodbath, but still a red day nonetheless. And really quick, speaking of the stock market, make sure to go and get your 2 free stocks by downloading Webull and funding your account. Refer 1 friend for a chance to win a free share of Google worth over $2,000. Refer 3 friends for a guaranteed $150 worth of Apple stock. Those promos end this month. You only have about 1 week left. Webull link in the description. Now, moving away from stocks. Moving away from the inflation report, the jobs report, the Federal Reserve meeting, and everything related to all that. Let's now talk about the silver and the gold. Sitting here on display, like I said before, have a little bit of everything. We got the 5-ounce Aztec calendar round. We have some 1-ounce silver bars, a Westminster bar, an American flag bar. We have a 10-ounce silver bar that you can't even see because it's covered in gold. We have a couple of Queen's Beasts over here, the Greyhound and the Yale. We have the Creatures of the North in the bottom corners, the Werewolf and the Kraken, some miscellaneous coins at the bottom in the center, Kangaroo, Maple Leaf, Type 1 Eagle, Type 2 Eagle, some Mercury dimes, and I think there are some Roosevelt dimes mixed in there as well. And then, of course, we have the 10th ounce Philharmonic, Maple Leaf, American Eagle, Britannia, Krugerrand, and a 1/4 ounce Philharmonic. So the overall theme of today's video is going to be the gold to silver ratio. It's currently, like I said before, 78, 79 to 1. And we currently have silver, rock solid green day. Meanwhile, gold is very mildly in the red. And like I said, this seems to be the trend. And if this trend continues, where silver continues to be on the rise, even if it's not by a whole lot, even if it's not massive jumps at a time, it doesn't have to jump up from $24 to $25 to $26 to $26.75 and then $27.50. It doesn't have to be moving that quickly. But for silver to be moving up in an upward direction, seeing more green days than red days, it'll have continue that upward trajectory. Meanwhile, gold hasn't really moved very much most of this entire year so far. Gold hasn't really done any crazy numbers. In fact, to my understanding, I think it's had probably more red days than green days, especially as of lately. So if this trend continues, if silver continues to move in an upward direction, even if it's slow, and gold continues to move in a downward direction, or at the very least, remains relatively stagnant, that gold to silver ratio gap will slowly but surely begin to close in. And I think that's what we've been seeing, because it wasn't all that long ago where I would start my videos by doing a spot price update and say that the gold to silver ratio is currently in the 85 to 1 range, and then shortly after that it's in the 83 to 1 range, and shortly after that it's in the 80 to 1 range, and here we are today, 78, 79 to 1 range. Now, I think it was just a year and a half ago the ratio was about 100 to 1, maybe 2 years ago at that point. I don't remember, but I remember making videos talking about the ratio being 100 to 1. In fact, I used that 10-ounce bar right there with one of those 10th-ounce gold coins, and I made a whole video explaining that just by looking at them, you wouldn't really expect it, but they're worth about the same. They're valued roughly the same. Same amount of currency, that is. At 100 to 1, a 10-ounce bar was worth about the same amount of dollars as a 1/10 ounce gold coin. That's no longer the case. We haven't seen a triple-digit ratio in a while. But right now, if we're looking at 78, 79 to 1, with the current spot price of silver about $24 and change, if silver were to climb its way back up to, I don't know, let's just say $40 an ounce, it might seem like miles and miles and miles away, but we've seen $40 silver in the past. On more than one occasion. We've seen $50 silver in the past. So technically, we know that it's possible. And metaphorically speaking, as I always used to say, metaphorically speaking, if it happened yesterday, it can happen again tomorrow. We could see spot price of silver go back up to $50 an ounce or beyond. But let's not get ahead of ourselves. Let's talk about $40 an ounce silver really quick. If the spot price of silver were to go to about $40 an ounce and the spot price of gold were to remain relatively stagnant or, not move a whole lot, or maybe move in a downward direction, or maybe move in a slightly upward direction, but not keeping up with silver moving up from 24 to about 40, we would see the ratio go from 78 to 1 to somewhere in the 40s. 40, 45 to 1, somewhere around there. My math might be off a little bit, but that's not the point that I'm trying to make. Point being is that if we see silver continue to climb, if we see silver have far more green days than red days, and the opposite for gold, or if gold just trades sideways for a little while, we could see the gold to silver ratio gap really start to close in. Now you have to figure out for yourself what the ratio would have to be for you to trade one metal for the other, if that's even your plan at all. I know that there are a lot of people out there who fully intend on trading some silver for gold when the ratio makes sense to them. I myself, I would be one of those people. Now, I would never trade all of my silver. I'd never trade half of my silver. I'd never trade most of my silver. Just some of it, just a portion, for some gold, just to capitalize on the ratio closing in a little bit and take advantage of the choice to get myself more gold and getting that gold with silver. I would like to do that. Right now, with the ratio about 78 to 1, no, absolutely not. I don't think now's the time at all to be trading any silver for any gold in any way, shape, or form for any reason. If the ratio were to go closer to 50 to 1, I've explained this in the past. At that point, I would be like, okay, now we're talking, can we see 40 to 1? Or somewhere in the 40s, 45 to 1, 47 to 1, 43 to 1, somewhere in the 40s. At that point is probably when I would actually start to take action. I would probably begin trading a little bit of silver for a little bit of gold. And remember, you don't have to trade a ridiculous amount of silver for a whole bunch of gold. You don't have to fork over the entire stack. Like I said before, when the ratio was 100 to 1, you could trade a 10-ounce silver bar for a 10th ounce gold coin or vice versa if that's what you wanted to do. You can trade a small handful of silver for a small handful of gold. You don't need to bring a whole wheelbarrow full of silver over to the coin shop for the trade. And by the way, speaking of the local coin shop, something that I think you need to do now, if, of course, you plan on trading silver for gold at any point, or if you plan on trading any gold for silver at any point, something that you need to do now is figure out how you would go about doing so at your local coin shop or any of the local coin shops in your area. It's very easy for me to sit here and click record on my camera and say, oh yeah, I would trade silver for gold when the ratio does this. Would I? I would. Would I be able to? I don't know. That's why you got to figure it out now. That's why you need to talk to your local coin shop now. It's very easy to say that you would trade silver for gold, but who's to say the coin shop would be willing to make the trade? Who's to say that they would trade gold for silver? They might. They probably would. I don't see any reason why they wouldn't. But these are the questions that you need to be asking now. You need to factor in the premiums too. Just because the spot price says that the gold to silver ratio is, let's just say, 50 to 1, just by looking at that number right there, you could say to yourself, okay, yeah, that's 50 ounces of silver for 1 ounce of gold. But you got to factor in the premiums. It might cost you a little bit more than 50 ounces of silver. They might want a little bit more as somewhat of a premium. They might want 51, 52, 53 ounces of silver for 1 ounce of gold. I don't know. I am not your local coin shop. So these are the questions you got to be asking now. Just hypothetically. You don't have to say, hey, when this happens, I want to trade a whole bunch of silver for gold. You don't have to present it that way. But hypothetically, go into your local coin shop. They probably know that you like silver and gold. They should know you by now. They probably know that you would like to get more gold, but gold is pretty expensive. So ask them, hypothetically, would I be able to bring in X amount of silver and trade it for X amount of gold? You can even talk about today's prices. Say if I brought in 70, 79, 80, or whatever ounces of silver, would I be able to trade it for 1 ounce of gold? And would I still be able to do that if the ratio closed in? Just to get an idea. Just to understand and see if you're on the same page. These are the questions you need to be asking your local coin shop now. These are the things you need to be figuring out now. That's a part of financial preparation. And it's also important to take into consideration that if and when the gold to silver ratio gap closes into 50 to 1, 40 to 1, 30 to 1, whatever it is that you find to be ideal, who's to say what the general state of the economy is going to be looking like at that point? It might be better. It might be no different than what it looks like today. It might be a whole lot worse. Who knows? So at that point, if you have a whole bunch of silver, there's a chance that gold might be hard to come by. Your local coin shop might be willing to trade gold for silver if they have gold to trade. So these are just things you need to think about. This is what you need to be thinking about now. This is what you need to be wondering about right now and asking coin shops in your area about right now and planning right now. Plan ahead. Stay ready so you don't got to get ready. You don't want to wake up one day and see that spot price of silver took off and you're like, okay, now I could trade it for a little bit of gold and start calling up local coin shops and introducing yourself because you've never been there before. You don't want to be in a situation like that. You want there to be a game plan already built in. You want there to be somewhat of a system. Now, there will be disruptions. Like I said before, spot price of silver could absolutely go back up to $40, $45, $50. We've seen those numbers in the past. Metaphorically speaking, if it happened yesterday, it can happen again tomorrow. But who's to say that the spot price of silver is going to go up to $40, $45, $50 while gold remains stagnant? By the time silver goes up to $50 again, we might be looking at $2,400 gold for all we know. Because usually both metals move in the same direction. They don't usually go in opposite directions. So these are just some things that I think you need to consider. These are some things that I believe you should be worrying about now and figuring out now, and these are the questions that you should be asking now. Don't wait until it's time to take action to figure out a game plan on how to take action. Figure it out now, or at least begin figuring it out now. Get the first couple steps taken care of now. Don't wait until game day to start practicing. So I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. What are your expectations for the February jobs report that should be coming out the very beginning of March? What are your thoughts or expectations for the February inflation report that should be coming out March 10th? And what do you think the Federal Reserve meeting is going to be all about? Do you think that they're going to be coming to a different conclusion? Do you think that they're going to stick to their game plan? Do you think that they're going to have to change their strategy? And of course, when it comes to the gold to silver ratio, what would the ratio need to be for you to begin trading a little bit of silver for a little bit of gold? Head on down to the comments and let me know. If you guys liked today's video, please hit that like button, subscribe if you're new, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. We have the Luck Has Nothing to Do With It t-shirts and hoodies only available until St. Patrick's Day. Get one while you can, and a portion of the proceeds are going to St. Baldrick's Foundation. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts every single day. You can watch all of my videos early and commercial free. I post vlogs every Saturday morning, and there are a ton of other perks as well. VIP Club link in the description. And of course, last but not least, go and get your 2 free stocks by downloading Webull and funding your account. They'll give you 2 free stocks just for doing so. Then if you refer one friend before the end of the month, they're going to give you a spin on the Webull wheel where you have a chance of winning a free share of Google stock worth over $2,000. If you don't want it, get it anyway, sell it, over $2,000 to get some silver and gold. And then, of course, if you refer 3 friends before the end of the month, they're going to give you a guaranteed $150 worth of Apple stock. Those promos end this month. You only have about a week left to capitalize. Webull link in the description. Time is running out. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? When it comes to the jobs report, the inflation report, and the Federal Reserve meeting, 3 big events that will be coming up over the next 2.5 weeks. What are some of your expectations for those right there? But then, of course, more importantly, when it comes to the silver, when it comes to the gold, and when it comes to the gold to silver ratio, where would the ratio need to go for you to begin converting a little bit of silver into a little bit of gold? Or if the ratio moved in the opposite direction, what would it need to do for you to trade a little bit of your gold for a little bit of silver? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.